Bitcoin trails gold in 2025 but dominates long-term returns across major asset classes. Gold leads Bitcoin year-to-date, but BTC's cumulative return since 2011 dwarfs all major asset classes, including gold, stocks, and real estate. Bitcoin slipped 0.11% in the past 24 hours to $116,702, according to CoinDesk Data, but it remains up 25% year-to-date, second only to gold's 29% gain among major asset classes, according to data shared by financial strategist Charlie Bilello on X. Both assets have outperformed other major asset classes this year, such as emerging market stocks, VWO plus 15.6%, the Nasdaq 100, QQQ plus 12.7%, and U.S. large caps, SPY plus 9.4%. Meanwhile, U.S. mid caps, MDY, and small caps, IWM, have only gained 0.2% and 0.8%, respectively, his data showed. This marks the first time gold and Bitcoin have occupied the top two positions in Bilello's annual asset class rankings since records began. However, zooming out, Bitcoin has delivered an extraordinary 38,897,420% total return since 2011, a figure that dwarfs all other asset classes in the dataset. Gold's 126% cumulative return over the same period puts it in the middle of the pack, trailing equity benchmarks like the Nasdaq 100, 1,101%, and U.S. large caps, 559%, as well as mid caps, 316%, small caps, 244%, and emerging market stocks, 57%. Based on Bilello's figures, Bitcoin's total return has exceeded gold's by more than 308,000 times over the past 14 years. When measured on an annualized basis, Bitcoin's dominance is equally clear. The flagship cryptocurrency has delivered a 141.7% average annual gain since 2011, compared with 5.7% for gold, 18.6% for the Nasdaq 100, 13.8% for U.S. large caps, and 4.4% to 16.4% for other major equity and real estate indexes, Bilello's data showed. Gold's long-term stability has made it a valuable hedge in certain market cycles, but its pace of appreciation has been far slower than Bitcoin's exponential climb. Renowned trader Peter Brandt weighed in on August 8, contrasting gold's merits as a store of value with Bitcoin's potential to surpass all fiat alternatives. Some think gold is a great store of value, and it is. But the ultimate store of value will prove to be Bitcoin, he said on X, sharing a long-term chart of the US dollar's purchasing power. His comments echo the growing narrative that Bitcoin's scarcity and decentralization make it uniquely positioned to outperform traditional hedges over time. Read more. Chart of the week. Tariff carnage starting to fulfill Bitcoin's store of value promise. Bitcoin's ability to hold above six figures in 2025 while maintaining a top 2 performance among major assets underscores its resilience in a volatile macro backdrop. Traders are watching whether it can retest the year's peak near $123,000, while long-term holders point to its outperformance since 2011 as evidence of its staying power. Market participants say upcoming macro data and risk appetite across equities and commodities could set the tone for the next leg. Read more. Bitcoin's still on track for $140,000 this year, but 2026 will be painful, Elliott Wave expert. Siamak Masnavi is a researcher specializing in blockchain technology, cryptocurrency regulations, and macroeconomic trends shaping the crypto market. He holds a PhD in computer science from the University of London and began his career in software development, including 4 years in the banking industry in the city of London and Zurich. In April 2018, Siamak transitioned to writing about cryptocurrency news, focusing on journalism until January 2025, when he shifted exclusively to research on the aforementioned topics. AI Boost indicates a generative text tool, typically an AI chatbot, contributed to the article. In each and every case, the article was edited, fact-checked, and published by a human. Read more about CoinDesk's AI policy.